Good morning, investors. You are now on KleverStock with me, Ainun Jaria, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. The KLCI stayed under consolidation pressure on Wednesday, with downside risk intensifying amid fears of a September rout in U.S. markets. On Wall Street, the first trading day of September, a month that is historically weak for equities, saw indices trade lower after the U.S. Court of Appeals ruled that Donald Trump's tariffs were illegal, casting uncertainty over the country's economic outlook. The KLCI opened 1.47 points lower at 1,575.23 compared with Tuesday's close of 1,576.70. An analyst noted that any reversal of tariffs could ease pressure on exports. TA Securities said that immediate support remains at the 50% Fibonacci retracement of 1,527 points, with stronger support levels at the 38.2% retracement of 1,490 points and the 23.6% retracement of 1,444 points, while resistance is maintained at 1,610 points, with the next hurdle at the December 2024 high of 1,644, followed by stronger resistance at 1,684. Malacca Securities expects the local market to turn defensive following the negative overnight performance in the United States, and that traders could focus on defensive sectors like banks, REITs, and consumer stocks, highlighting MBank, IGB REIT, and 99 Speedmart. It added that the solar-related counters such as Percat and Northern Solar remain in an uptrend, underpinned by government initiatives like NETR, NEM, and LSS projects, while investors may also look toward the upcoming IPO of Express Power Solutions Berhad. Among the actively traded counters, TWL shed half a cent to close at 2.5 cents compared to 3 cents yesterday, marking a decline of 16.7%. Meanwhile, Magma rose half a cent to 31.5 cents from 31 cents, an increase of 1.6%, while Opsta jumped 8 cents to 56 cents, rising 16.7%. Consumer counters also saw notable buying interest, with Heineken adding 46 cents to 21 and 8 cents from 20 ringgit and 62 cents, a gain of 2.2%. Fraser and Neve rising 38 cents to 27 ringgit and 50 cents, an increase of 1.4%, and Carlsberg gaining 16 cents to 16 ringgit and 46 cents, up 1%. We should now look at the performance of our local currency. The ringgit opened slightly higher this Wednesday ahead of the United States labor market data this week, which will be a key input when the Federal Open Market Committee meets on September 16 and 17. At 8 o'clock this morning, the local note rose to 4.2255 /2,370 against the dollar, compared with yesterday's close of 4.2270 /2350. The Bank Muamalat Malaysia Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid said the odds of a 25 basis point rate cut remain elevated, but investors are still cautious given mixed economic signals. He pointed to the job openings and labor turnover survey on JOLTS, due tonight, with consensus estimates of 7.39 million job openings in July, compared with 7.437 million in June. Dr. Afzal Nizam noted that the ringgit slipped 0.13% yesterday against US dollar to 4.2310, and he expects the US dollar to ringgit or USD MYR to trade today between 4.23 and 4.25. Meanwhile, the ringgit opened stronger against other major currencies. It gained against Japanese yen to 2.8437 or 2.8519. Against the British pound, it rose to 5.6541 or 5.6695. Against the euro, it appreciated to 4.9155 or 4.9289. The local note was also firmer against most ASEAN currencies. It edged up against the Indonesian rupiah to 257.4 or 258.2. It advanced against the Singapore dollar to 3.2776 or 3.2870. And it strengthened against the Philippine peso to 7.34 or 7.37. However, the ringgit weakened against the Thai baht, easing to 13.0691 or 13.1120. Moving on to local economic updates. Malaysia's trade performance continued to soar, reaching its highest value ever at 1.73 trillion ringgit for the period between January and July 2025, an increase of 4.7% compared to 1.65 trillion ringgit in the same period last year. Now, according to Malaysia External Trade Development Corporation or MATRADE, board member Datuk Muhammad Medan Abdullah, exports stood at 900.47 billion ringgit, while imports recorded 830.16 billion ringgit, giving the country a trade surplus of 70.31 billion ringgit. Is that the performance was in line with the growth trajectory seen in 2024, when trade volume hit a record of 2.879 trillion ringgit, a 9.2% jump from 2023. Exports in that year exceeded 1 trillion ringgit for the fourth year in a row, rising to 1.508 trillion ringgit, surpassing by 87.2% in the export target set under the 12th Malaysia Plan. Imports also climbed by 13.2% to 1.37 trillion ringgit, leaving Malaysia with a trade surplus of 136.88 billion ringgit, marking the 27th consecutive year of surplus since 1998. At the opening of Negeri Sembilan Export Day, officiated by Menteri Besar Datuk Seri Aminuddin Harun and attended by MATRADE Deputy Chief Executive Officer Mansor Shah Wahid, Muhammad Medan highlighted the state's contribution. Negeri Sembilan recorded a trade volume of 19.27 billion ringgit in 2024 compared to 2023, with exports valued at 1.03 billion ringgit. For the first 7 months of 2025, the state registered exports worth 880 million ringgit, a 10.2% increase from the previous year. MATRADE continues to support Malaysian exporters through its 48 trade offices worldwide and through development programs and promotions. From 2024 to July 2025, about 200 companies in Negeri Sembilan received 1.5 million ringgit in grants under the Market Development Grant Service Export Fund and e-trade programs, successfully generating 672.18 million ringgit in sales. Over the same period, 95 export promotion programs and 1,835 businesses matches were organized, with 72 Negeri Sembilan exporters recording sales of 191.64 million ringgit. As of July 31, a total of 13,314 Malaysian companies were registered with MATRADE, 315 of them from Negeri Sembilan. Looking ahead, MATRADE will organize the 21st Malaysia International Halal Showcase or MIHAS at MITEC Kuala Lumpur from September 17 to 20. The MIHAS brand also made its international debut in Dubai and the United Arab Emirates in 2024, and this year will be brought to Shanghai, China from November 5 to 10 during the China International Import Expo, targeting 200 Malaysian companies. Moving on to corporate news updates. Opstar Berhad has announced a major step into the next generation of artificial intelligence technology. Together with its subsidiary Iris Labs in Berhad, the company has signed 2 memorandums of understanding with Taiwan-listed Inventec Corporation and its subsidiary Asiac AI Co. Ltd. According to a filing with Bursa Malaysia, the collaboration will focus on designing and developing next-generation AI network processing chips, including a new AI edge computing processor for advanced computing, networking servers, devices, and applications. Under the first MOU, Opstar and Iris Labs will provide integrated circuit design capabilities and technical support. Inventec will contribute system integration, know-how, market access, and commercialization channels, while ASIC AI will take the lead on chip architecture, bringing in its proprietary neutral processing unit intellectual property. The second MOU outlines plans for Iris Labs and ASIC AI to establish a joint venture within 90 days, subject to due diligence and internal approvals. Opstar confirmed that ASIC AI will take charge of defining the chip architecture and contribute its proprietary NPU technology as well as integration expertise. The collaboration also plans to explore opportunities under the government initiatives including ARM Ltd Compute Subsystem Program to tap into available resources, incentives and technical support. In a statement, Opstar said the collaboration between the parties will provide greater synergy and business sustainability through the expansion of its presence and strengthen the profile of Opstar and its subsidiaries. The collaboration is expected to contribute positively to the future growth of the company. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Malayan banking Berhad has become a 17.9% shareholder of offshore support vessel player Alam Maritime Resources Berhad following the execution of the latter's regularization plan. 99 Speedmart Retail Holdings Berhad has confirmed the opening of its first store in China, located in Fuzhou, Fujian Province on 31st August 2025. DBS Group Holdings Ltd plans to buy a stake in Alliance Bank Malaysia has stalled, as Singapore's biggest bank has yet to get regulatory approval to commence talks, Bloomberg reported, citing people with knowledge of the matter. ITMEC System Berhad secured its third concession under the Selangor Intelligent Parking Initiative, this time involving the Selayang Municipal Council. And finally, OSK Holdings Berhad has entered the Rawang market with a 58 million ringgit acquisition of 3 freehold land parcels spanning 5.9 hectares. And finally, Kennington Group Berhad has signed 6 framework agreements for its upcoming semiconductor hookup project in Dresden, Germany, with a potential contract value of up to 50 million euro. Now that's a wrap for Moneybell Updates with me, Ainujaria on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.